I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it will keep generating momentum from here.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day.
I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think of, and actually of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, a tenth of a percent. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency, or is it a property? Or, there's massive debate. A lot of people say, well, it's a currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it, and it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right?
The landscape of Bitcoin exchange-traded funds, ETFs, is influenced by a myriad of factors, encompassing both misconceptions and regulatory uncertainties. At its core, the debate often revolves around the classification of Bitcoin. Is it a currency or property? This fundamental question shapes perceptions and regulatory frameworks, thereby impacting the evolution of Bitcoin ETFs. One prevalent misunderstanding pertains to Bitcoin's nature. While some perceive it solely as a digital currency, akin to fiat, others view it as a form of digital property or commodity. This ambiguity creates complexities, as different regulatory bodies categorize Bitcoin differently. Consequently, the classification significantly influences the eligibility and regulatory scrutiny of Bitcoin ETFs. Moreover, confusion abounds among regulators, bankers, and mainstream media regarding Bitcoin's utility. Traditional financial institutions may struggle to grasp its decentralized nature and disruptive potential. This lack of comprehension can lead to skepticism or outright opposition to Bitcoin ETFs, impeding their adoption and regulatory approval. In this environment, regulators face the challenge of balancing innovation with investor protection. The nascent nature of cryptocurrency markets, coupled with their inherent volatility, prompts regulators to tread cautiously. They must devise frameworks that foster innovation and market integrity while safeguarding against potential risks such as market manipulation and investor fraud. Furthermore, the role of mainstream media cannot be overlooked. Sensationalist narratives or misinformation can exacerbate uncertainties surrounding Bitcoin ETFs, influencing public perception and regulatory discourse. Clear, accurate communication is paramount in dispelling misconceptions and fostering informed decision-making among stakeholders.
Right, the people that criticize it, there's no way Warren Buffett spent 100 hours studying Bitcoin, right? There's not likely that everyone that criticizes it spent 100 hours studying it. They haven't read the Bitcoin Standard. They probably haven't listened to 20, 30, 40 hours of podcasts, right? So the critics are misinformed, and the mainstream investors, they have all the money, right? There's $900 trillion of wealth out there. There's only $1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education.
Warren Buffett, the legendary investor, has offered his perspective on Bitcoin, a topic that has stirred both fascination and skepticism within the investment community. Buffett advocates for a thorough examination of Bitcoin before forming any opinions about it. He suggests dedicating at least 100 hours to study this digital asset, emphasizing the importance of depth in understanding. According to Buffett, critics often lack this depth, leading to misconceptions and uninformed judgments. One notable aspect highlighted by Buffett is the relative size of Bitcoin in the broader financial landscape. While Bitcoin's market capitalization has surged to over $1 trillion, it represents only a fraction of the total wealth across various asset classes. With a total wealth estimated at around $900 trillion, Bitcoin's share remains modest. This perspective underscores the significance of mainstream investors who hold the lion's share of global wealth. Buffett's approach encourages investors to delve beyond surface-level discussions and delve into the fundamental aspects of Bitcoin. By dedicating sufficient time to study and analyze its mechanics, potential, and risks, investors can make more informed decisions. In a financial landscape characterized by rapid changes and evolving technologies, Buffett's emphasis on deep understanding serves as a valuable reminder for investors to approach new assets with diligence and discernment.